In a highly anticipated move, China responded aggressively on Tuesday after former U.S. President Donald Trump imposed additional tariffs on Chinese goods, reigniting the long-standing trade war between the world's two largest economies. Here are the 5 key developments in China's retaliation. 1. China unveils retaliatory tariffs. Following the U.S.'s imposition of a 10% tariff on all Chinese imports, effective at 12:01 a.m. Eastern Time, China swiftly announced its own countermeasures. The Chinese government imposed a 15% tariff on U.S. coal and liquefied natural gas, a 10% tariff on crude oil, farm equipment, and select automobiles. These tariffs are set to take effect on February 10, directly counteracting Trump's latest escalation. 2. Tech war intensifies, Google under investigation. China ramped up pressure on U.S. tech firms by launching an anti-monopoly investigation into Google, a subsidiary of Alphabet Incorporated. Although Google is largely restricted in China, it still operates through partnerships with local firms, particularly in advertising. While details of the probe remain unclear, this move signals growing tensions in the tech sector between the two nations. 3. China targets major U.S. companies. China announced that 2 major American firms, PVH Corporation, owner of Calvin Klein, and Illumina, a biotechnology company, would be placed on its unreliable entities list. The Chinese government accused these companies of engaging in discriminatory practices against Chinese businesses, further escalating economic tensions and increasing pressure on U.S. firms operating in China. 4. China imposes export controls on rare earth minerals. In a move with significant global implications, China's Ministry of Commerce and Customs Administration announced export restrictions on key rare earth minerals including tungsten, thorium, uranium, niobium. These materials are critical to industries such as clean energy, technology, and defense. Given that China controls a substantial portion of the global supply, this decision strengthens its leverage in the ongoing dispute, potentially disrupting supply chains worldwide. 5. Market turmoil and economic uncertainty. China's swift retaliation triggered immediate market reactions. Hong Kong stocks paired gains. The U.S. dollar strengthened. The Chinese yuan weakened. Experts warn that the deepening trade war will continue to destabilize global markets. According to Gary Ng, a senior economist at Natixis in Hong Kong, the U.S.-China trade conflict is far more complex than U.S. disputes with Canada or Mexico, making a resolution difficult both economically and politically. Underlying causes and future outlook. Although the U.S.-China trade war initially erupted in 2018 due to the U.S. trade deficit with China, the latest tariff escalation is also linked to concerns over the flow of fentanyl and illicit drugs from China to the U.S. Trump has warned that tariffs could increase further unless China takes stronger action to curb the opioid crisis, an issue Beijing has dismissed as an American domestic problem. China has vowed to challenge the new tariffs at the World Trade Organization, WTO, and implement further countermeasures. Despite the rising tensions, both sides have left room for negotiation. However, Trump and Chinese President Xi Jinping are not expected to meet immediately, leaving uncertainty over when or if a resolution will be reached. Global economic impact. As experts at Oxford Economics predict, the escalating trade war could lead to even higher tariffs, potentially slowing global economic growth. With energy, technology, and manufacturing industries directly impacted, businesses worldwide face a period of heightened uncertainty. Unless the two superpowers can find common ground soon, will the U.S. and China reach a compromise, or will this trade war continue to reshape the global economy? Only time will tell.